Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Thursday, January 6, 0804 a.m. New York time. Stock market sold off yesterday, so it's considered a retracement in my point of view. Let's identify weakness, strength, opportunities to buy here at the dips for investing or short-term trading. We're going to look at the higher time frame to get better perspective, much more broader and intelligent perspective of what occurred. S&P 500 cash index. The weekly candle made a higher high, higher low, currently below the low of the prior week. Again, S&P 500 index is the go-to index institutions and individual investors want to either equal or outperform. NASDAQ 100 made a lower low and a lower high, even weaker than the S&P 500 on the weekly candle. Dow Jones Industrial Average, higher high, higher low, and it's green currently. That's showing leadership. The index is better than two other indexes. Not all the stocks inside the Dow 30 index are showing the same chart view, and I will show those later in the week, likely a video on those single stocks. Russell 2000, also like the S&P 500, did make a higher high, lower low, and now worse below the low of the prior week. Dow Transports actually made a higher high, higher low, but it's red back inside the prior week. That's a trend up still. And the Dow Utilities inside candle for the week. So the takeaway here is part of the market had a sold off, part of the market dropped. Okay. So right now, if I was in an index and look at this point of view, I'd be leaning towards this index to be bullish. I'll look at the single stocks in there to see which ones performed either equal or better. But we should take this down to the faster time frame, the daily. We already identified the bigger picture. Looking here at the daily, each candle is a day and it represents yesterday. The S&P 500, yeah, lower high, lower low, huge sell-off decline. Right there into a new potential demand zone. NASDAQ 100, lower high, lower low, also huge trading down. And the Dow Utilities, interesting, made a higher high and then sold off. So let's look at these top three here. Big difference. Yeah, they're all red. They all made lower lows, but again, during the day, the Dow made a higher high. Russell 2000, lower low, lower high. Dow Transports made a high, but didn't take out that prior high and made a low. Much more of consolidation. And the Dow Utilities did close green for the day, but made a lower high, lower low, and closed below that prior close. That's still weak. So again, the takeaway here is looking at the daily of all of them. They're all looking bad. Yep. Even though they all didn't close red, they closed below the prior day's close. Got it. Again, the stronger one still is showing as the Dow. Inside the S&P, we should also look at the, yep, let's go to the sectors. 11 sectors in the S&P 500. We'll look at the weekly time frame. Let's do that. There we go. So each candle, again, represents a week, and these are the 11 sectors of the S&P 500. XLK, lower high, lower low, red. XLV, same thing, lower high, lower low, red. Wow, look at this, XLF, all-time new high. It took out that swing high, outstanding. Let's take away that yellow horizontal line, high, higher low, closing green above the prior week. That's XOF, that's the financial sector, the banks. You watch my past video, I mentioned if and when the time comes when the Fed raises interest rates, this would be bullish. When the Fed talks about raising interest rates, this could be bullish bias. That's what's likely occurring. Financials. XLY. Well, let me go back to the financials. The financials, this stock index, XOF, it represents the big banks, the big ones, your JP Morgan, Goldman Sachs, Bank of New York City. The Dow index is heavily weighted in banks too. That's another reason the Dow is likely up, because the bank stocks in the Dow did better than some of the maybe retail ones or manufacturing ones. But again, that would be determined when I show you the video on the Dow single stocks. XOY, yep, higher high, and then close red below. XLC, lower low, lower high, red. XLI, interesting. That's a white candle. That means on my programming, it means it opened and closed the same price. So for a current weekly candle, to take out that swing high, now I remove that, making all-time new high. So higher high, higher low, currently trading above the close of the prior week. That's XOI. That's good. XLP, also all-time new high, higher low. Look at this. You identify what's going on here. Looking at the individual sectors in the S&P 500, we're narrowing down where the leadership is and what not to be in. XLE took out the swing high also, outstanding. Higher high, higher low than the prior week, all-time new high for the year. XLU, inside candle. XLRE, whoof, huge red candle. So that's the real estate sector. XLB made a higher high, higher low, but it's red. It went back inside that prior range also. There we go. Such a mixed picture of looking at these stock ETFs, the sectors, first looking at the equity indexes. When we look at those equity index, we saw they were almost all bad except the Dow on the weekly time frame, the weekly. Looking here at the weekly on these, we could definitely see clearly again who the winners were. They're the ones that are higher highs, higher lows, green above the close of prior week. Yep, it's a good mix of them here, but we also see where the losers are and not to be in them. Okay, let's take this down to the faster time frame, the daily. Again, same thing, the S&P 500 sectors on the daily candles from the close yesterday. XLK, lower low, lower high, big sell-off. XLV also trending down, lower low, lower high. XLF, the financials, were yesterday made a higher high, higher low, closed red back inside that prior candle. What's good about this is we didn't take out that low of the prior day yet. XLY, nope, lower low, lower high, big sell-off. XLC, same thing, huge sell-off. XLI, interesting, higher high, higher low, closed back inside that prior day, but then to take out the low, that's showing better leadership. XLP, outstanding, higher high, higher low, closed green, back inside the prior day. XLE, also higher high, higher low, closed red. XLU, nope, lower high, lower low, green below the close of the other one, trending down. The real estate, oof, lower high, lower low, huge sell. XLB, higher high, higher low, closed red, oof, bearish pin bar. So now we'll take this away. They almost all closed red. Yep. Majority of them closed either inside the range of the prior day or below. But look at this. Declining, declining. Nope. It's building consolidation. XLF I mentioned. XLP, same thing. That looks much better. XLE, much better. Yep. So we got narrowing that down when we saw the higher time frame here. Yep, the financials. So the takeaway here is now, if you understand what's going on here, the higher time frame, we're helping identify the setup, the strength, the leadership. If you're trading long, if you're bearish, then it's the inverse. Go down to the daily time frame and looking for the confirmation. And then from there, we'll be sitting on our hands, waiting for that retracement come into the demand zone. And from the demand zone, we'll look for that trigger for entry to buy. I explained that pretty well on Patreon. So you're welcome to join my Patreon. See that. But I like showing that even further in the next videos to my Patreon members. So now let's take this to some single stocks. The FANG Plus, the ones that are most popular by the institutions and retail traders. We'll take them also to the weekly example. The FANG Plus. Start off looking at Apple on the weekly. Higher high, lower low, closing below the prior week low. That's not good. Microsoft, lower high, lower low, closing below this consolidation. So takeaway, notice this red horizontal line. That's the supply zone of sellers. I have these red arrows facing down. Sorry, I have these yellow arrows facing down. If you've been following me for any length of time and aware of what my position has been on Microsoft, bearish, looking for the price decline, making income as it's declining. Also, I mentioned this on Nike. Yep. So I mentioned plenty of times that you should be trading bearish this, not to be buying it. Consolidation, breakdown consolidation, also building staircase pattern lower low. Not surprised we had a huge sell-off. Sure, we may have a retracement go back up. The bigger picture is I still expect this to go lower. There's opportunities to trade bearish to earn income. So this is working out very well. And this was shared to you all way before this event occurred. Not based on news, but based on a chart perspective, the interpretation I get from reading the charts. And it worked out. Yep. Amazon, lower low, lower high. Facebook, lower low, lower high. Google, yep, lower low, lower high, breaking below that consolidation. Tesla, look at that. Really? Higher high, higher low, closed above that prior close. We know what happened during the week. There was big news. November Victor Delta Alpha, lower high, lower low, red. Netflix, oof, lower low, lower high, right into that swing zone. Swing low, yeah, opportunity. And Bravo Alpha. Green, higher high, higher low, still under distribution. So those are the weekly. Again, so the takeaway, they all look bad. And it's the opportunity for the institutional investors when there's such a huge sell-off and they've been unloading, selling for past weeks and months, small positions. Now they could mass that even more by dumping bigger shares, volume of shares in the trade yesterday, such as this, and masking it because that stock alone is not the one falling down. So as you got those equity indexes I showed you, huge sell-off, and these single stocks huge sell-off, you can't just point out saying, well, it's Microsoft being sold by itself. That's why the Microsoft's all bad. Just that. Nope, they're masking. So that's really intelligent, really bright what they're doing, masking it, selling it off when all the other ones declining. Yeah, so huge institutions that manage other people's money have been selling this for the past weeks, months, and did even more. Why? Well, they want to rotate out of that, put the money into something else, maybe another stock or fixed income or some kind of financial instrument to earn income. Because they perceive that it's not as great return on investment anymore, those big institutions. So again, I would not be buying this. Yeah, there are other institutions that are still buying this, maybe doing dollar cost average. but the majority of big shareholders are more selling. Got it. Let's take this down to the daily time frame. There we go, FANG Plus. So look at yesterday's performance on an individual basis. Apple, yep, lower high, lower low. Right into a key demand zone, 175. Interesting. Microsoft, woof, huge sell-off, yeah. And look, it's been occurring for a while when it was in that demand zone. Plenty of opportunity that I shared to you to get in trading bearish. Amazon also breaking below that consolidation. And Facebook, huge sell-off. Google, huge sell-off. Breaking below that key support of the consolidation. Tesla, yep, there we go. Huge sell-off, filling that gap. November Victor Delta Alpha, huge sell-off. Potential demand zone over here for buyers. We'll watch that, see what happens. Netflix, oof, yep, took out that swing low. So let's open this up. This is again daily candle. There we go. That was a swing low, and it took it out. And that's been declining for some time since last year. Struggling. Let's just put this in perspective. Hear this with another big media company, Disney. Oops. There we go, Disney. So Disney, the lows last year were going up here, but again, selling off the past few days. Whereas Netflix was much more of a decline, taking out those swing lows. Yeah, but they're both were bad performers. And Bravo Alpha for the daily, wow, made a higher high, higher low, closing above the close of the prior range. Yeah, I would not be buying this. I've again mentioned this in the past videos I shared to you. I'd be shorting it, trading bearish on the downside. Yep, there we go. So the equity indexes pre-market. Again, we'll do this one more time. The equity indexes, weekly candles. Look at them. Take it down to the daily. And now let's go intraday with the futures. Again, these are the cash indexes. These trade 9:30 a.m. to 4 p.m. But we're going to look at the cash, the pre-market futures. S&P 500 is trading just inside the range of the low of yesterday. The Nasdaq 100, yep, it overnight went lower. And now just still shy of the low, still below the low of yesterday. Where the Dow Jones Industrial Average futures, that was a lower yesterday. We're trading above that now, back inside the range. And the Russell 2000, that's low yesterday, and it's back inside the range. These are 15-minute candles intraday because the futures trade nearly 24/7. So again, the bigger perspective is things are still looking like we might have a further decline. So again, I showed you which ones I'd be watching, and one of those I mentioned were the financials in that index, the Dow. So if you like what I share with you, please click that like button. Thank you.